Hi, I'm Haesley Cush from Living Here Cush Partners, and I'm here with Paul Hixon from Loan Market. We want to update you on this ever-changing environment that we're all living through together in Covid-19, specifically with the Prime Minister's announcement last night that has dramatically affected the earning income of thousands of Australians. I wanted to reach out to you in relation to your investment properties just with a couple of things that is important that you are really up to date with if for whatever reason your tenant is affected, and there will be tenants that are affected. And the first one is to make sure that you have got your landlord insurance up to date. Not every policy is the same. We've sent a text message out to everyone last week. I'm sorry if it seemed a little alarmist, but we were concerned that they were going to shut the window for people to sign up. So we managed to, we wanted to get that out to you straight away. Landlord insurance is really important should your tenant lose their job and not be able to pay their rent. And then your insurer will have some things with regard to that we'll need to work through. Paul's here today to talk to us about the funding side of property. Paul, I might hand over to you. There's some key questions that we've been fielding from landlords.
Yep.
If you could run through questions and answers, mate.
Absolutely. So there's a few things we can do initially, but we'll go straight to the question. So this is coming out of one lender today, and you would need to speak to each of your lenders individually to talk to them about it. But the first thing that's coming out is around deferred repayments. So deferred repayments would whereby you can put off repayments on your loan for 6 months.
So this would be my tenants said they can't pay their rent.
Yep.
I'm concerned about how am I going to pay my mortgage.
Yep.
You'd reach out to your lender and you would ask for a deferral.
Yeah, that's correct.
Okay, so what does that mean?
And then for a deferral, that means you wouldn't pay for 6 months, but it does mean that your interest would accrue and you would pay at the end of the 6 months, and those repayments would be spread over the remaining term of the loan. So
the amount of interest that I haven't paid for that amount of time would then be divided back over
the remaining term of the loan.
Okay.
So it's a short-term fix, but could obviously get through, be really useful. There's a few key points to it, which will depend on the lender. So, for example, we just covered off the first question, but will my loan be considered to be in arrears by the lender during this period? One bank has come out and said customer will be considered to be in arrears, but while the loan is in hardship, we will not be recording repayment history indicators through the comprehensive credit reporting. Their reporting status will be set to frozen for the time in hardship. And what that means is really important is when they come to look to refinance the loan in the future or their credit rating, that there's actually no black marks set against their history for that deferred period.
So do I, as the lender, apply for hardship? I go to my bank, I say, here are the circumstances with my tenant.
Yep.
Here's some supporting evidence.
Yep.
I want to apply for hardship. They give me the 6-month deferral.
That's correct.
And then no black mark against my name coming out of that lender.
Yeah, coming out of this lender, but you need to check with each lender individually.
Okay.
We're speaking to the lenders today. They've got 3 or 4 hour backlogs on the telephones. So a lot of lenders are setting this up through their websites, so you can make a deferred interest repayment through the website. The other option is to switch to interest only, or to switch, and that again would be initially a call to the lender to see if they can do it automatically over the phone, but most of the time, or through the net bank or internet banking, but most of the time it is a full credit application to switch to interest only. So it could be that reaching out to your mortgage broker or your lender and getting an application to switch to interest only, and interest only loans are really cheap again. Yeah. We've got interest only fixed rates below 3%, and that was before the latest cuts.
Yeah.
So very, very competitive and a good way to hold the loan.
So one of the things that we are dealing with at the moment is ensuring that you have your loans at the absolute best rate. So there's no point governments, reserve banks, lenders dropping rates if we're not, as consumers, readdressing our rates and getting them as low as possible. And I think you mentioned that
2.16% for an owner-occupied fixed rate for 2 to 3 years.
Okay, so this is going to allow you that if your tenant can't pay their full rent, maybe they can pay a bit, maybe their circumstance is going to be different, this dramatic drop in rates is going to allow you, all of us, to be able to see how we can manage through this period. And then if you think about it, that's $2,100 per 100,000 approximately. That you've got out lending that you can then divide over the life of the loan. So on 500,000, about 10 grand over the year.
Yep.
And then you can divide that $10,000, which is $200 a week, over 1 year, or over 2 years, $100 a week, and so on and so forth. Yep. So really please reach out to us, talk to Paul, Loan Mark. He's our preferred provider, but whoever it is, your bank, your preferred broker, doesn't matter who it is, you need to check in on those things. So quick recap. Any more points to raise here?
No, I think you can just obviously switch to an interest-only term as well as the main one, or even get your repayments recalculated so you're only paying the minimum repayment. Because as interest rates have dropped over time, the banks don't automatically drop your repayment; they leave them at the higher level. So if you, I think CommBank are actually doing it for all customers at the start of May. But before that time, if you go in, call them and ask them to recalculate your repayments, you might be overpaying your loan quite considerably and the repayments can drop. Okay, all right. So final things, check in on your insurance. We'll be updating you with any changes that we hear from your tenant. And if in extreme circumstances where you're worried about how you're going to pay your mortgage, reach out to your bank, apply for hardship, get a 6-month deferral of payments. Interest will then be recalculated over the life of the loan and you won't have a black mark against your name. We'll continue to update you as things evolve. Thanks, Paul. Thanks for your advice and thanks for tuning in.